Let's bring in Bob Jordan, CEO of Southwest Airlines, joining us from the company's headquarters in Dallas. Bob, thank you very much. I appreciate you joining us this morning. Let's talk about the fourth quarter before we get into the MAX. You beat on the top and the bottom line, and it's your guidance for the first quarter and this year. You guys are looking to grow, but at a much more judicious pace in terms of adding capacity, correct?
Phil, that's right. Hey, we miss having you here in Dallas, my friend. We had a great 2023, record operating revenues, record passengers, record loyalty revenues. We got our winter operations preparedness in place. I'm just very proud of our folks. We restored the network and got all of our fleet flying, and so just a ton of progress. We actually, with no doubt, we ended 2023 a better company than we started. As you look at this next year, 2024, I think we have a great plan. We're going to focus on our financials. That's the one place where we are lagging. We have a really good plan that has double-digit increases in operating revenues. We expand our operating margins, and we cover our cost of capital in our plan, and that will be the absolute focus. You asked about our ongoing plans. Obviously, as we look at things like CapEx and capacity, we will take our progress against our long-term financial goals into account as we think about those things.
Let's talk about the fleet, Bob, because you guys announced today that you are taking the MAX 7 off of your plan for deliveries this year. You're going to take fewer MAXes. Obviously, everybody knows the story with the FAA restricting Boeing's ability to grow MAX production. Do you really think you're going to get the MAX 7, which hasn't even been certified? Do you really think you're going to get it next year, or do you have to push it out even further?
You know, we're going to take 1 year at a time here. We just want to plan prudently, and that means for me and for us, taking the MAX 7 and putting that into 2025 at the earliest, so not counting on it in 2024. Of course, if we don't take a MAX 7, we'll take a MAX 8. We'll work with Boeing. You know, the MAX 8 is a great aircraft, and obviously Boeing has a lot of work to do. This is unfortunate, but like Boeing, we support the work with the FAA oversight, because at the end of the day, it's going to make Boeing a better company. It's going to improve quality, and Boeing being a better company is really good for Southwest Airlines.
You talk about Dallas for 1 second. You did win the division, but you were not out in the first round of the playoffs. And what I do want to point out is that you came here and you told us that you would have healthy leisure demand. I didn't believe it. You told us that your loyalty program was going to kick in instantly. I thought that was actually fatuous. And you were going to manage business bookings much better. And you did every one of these things. How were you able to do it, accomplish it in 3 months?
Well, you know, the product is really good. Southwest Airlines has a terrific product, and we've made a lot of progress in 2023, and we intend to end 2024 an even better company as well. The demand for the product is really good. Again, record operating revenues, record passengers, record Rapid Rewards loyalty program revenues, and we see that strength continuing into the first quarter. Our network changes really go into effect in March, which I really believe that we will see a profitability inflection point in March. But no, sitting here today, demand for the first quarter is strong. And if you look at March, we are ahead of normal bookings. So, no, demand for Southwest Airlines is very strong.
You're talking about $1.5 billion in incremental profits because of these initiatives. That's an extraordinary figure, Bob. I don't know how do you do that? How does that work?
Well, we had a set of initiatives that we have carried forward, things like GDS, more business traffic. And then we've added to that a new set of things, primarily network optimization, which is worth, 2/3 of the revenue increases. So if you look at the initiatives that we're delivering before, you add on top of that things like the network optimization, which is very powerful. It's about matching the network to the demand. That adds up to an incremental pre-tax profit contribution of $1.5 billion here in 2024, and I'm very confident that we can hit those numbers.
Bob, it's Phil again. I want to get back real quick to the MAX discussion and deliveries from Boeing. You trimmed the number of MAXes that you expect to get this year. You originally said 85. Now you're coming back to 79. Are you confident that you're going to get those 79, or do you think you may have to trim that further this year if there continue to be questions about Boeing's ability to manufacture and deliver as planned?
Well, the good thing about our order book with Boeing, which I'm really pleased that we put a long-term new order book in place, is that there's a lot of flexibility. We can flex up, we can flex down. I think we just want to manage very prudently in an environment like this and plan against what we are confident that we can receive. That's what we did in 23. That's what we'll do again here in 24. You know, there were news last night that Boeing is going to be capped in terms of raising its production rate by the FAA until further notice. That's new news. We don't know if there is an impact on our delivery plan. If any, we'll work with Boeing. And as always, if there's an adjustment, we will adjust. But again, I support that because anything that helps Boeing improve quality, address the issues is good for Boeing, and it is good for Southwest Airlines.
You've always flown 737s. Does it matter to the customer what's happening in terms of the MAX, or do you think this is one of those? Obviously, it matters to the people immediately after that incident with Alaska Airlines. But long term, is there a residual carryover in terms of people saying, I'm not real crazy about getting on a 737 MAX?
You know, obviously, our customers want confidence in our product, and they have a lot of confidence in Boeing, just like I do. The 737 has a very long and storied history around safety. At Southwest Airlines, we have a very strong technical operations function that assures the quality of the product that is delivered to us and then ensures the ongoing quality of the product. So safety is number one here at Southwest Airlines. We take that very seriously, and I feel very good about our programs at Boeing and our programs after delivery to ensure safety. Obviously, Boeing improving quality, addressing the issues is good for their brand and the way our customers think about the aircraft, which means it's good for Southwest Airlines. But no, I have confidence in, again, the MAX 8 is a terrific aircraft. I have confidence that Boeing will address the issues, and our customers have a lot of faith in Southwest Airlines.
Hey, Bob, real quick, we've got to wrap up, but the inflection point in terms of profitability in March, what's the catalyst there?
It's really the network optimization changes that we put in place. The demand trends are very different than they were pre-COVID. Things like reducing Tuesday, Wednesday traffic, reducing the shoulder periods of the day, so the very early and very late flights, basically putting the flights where the demand is. Those adjustments are largely in place in March, and then they are fully in place in the summer, which is why I expect to see an inflection point in March in terms of profitability. Again, looking at the first quarter, and it's early, our demand is very strong. Bookings in place are strong. Bookings in place for March are actually ahead of typical norms. So I do expect an inflection point in our profitability here in March as those network adjustments come to fruition.